All right, so we were just talking about earnings and what I look at for a name that goes into earnings. And I mentioned, first of all, I don't trade a lot of earnings. The majority of what I do is swing trading. I probably do about 75 to 80% of my trades in a normal circumstance are swing trades. Another 10 to 15% are day trades. And maybe 1 to 2% of what I do is earnings trades. Um, and that may change, that changes a little bit based on volatility. So if the VIX goes back to 20, then I may be doing like 60% swing trading and maybe 30%, 30 to 35% day trading, right? That depends, that'll move with volatility. I'll change on how the market is, what the market is, providing to us. But when the VIX is under 15, then I'm usually swing trading. Earnings trades are very small in terms of what I do. I just don't think there's much consistency playing earnings. I've tried a couple years where I was doing 2 or 3 earnings trades a day. I just couldn't consistently achieve like a return on investment that was consistent enough for me. So I backed off from doing it. Now what I'll do is basically take 1 or 2 trades a week for earnings. But what I do look at is the first thing I'll do is I'll calculate the implied move, which we talked about earlier. It's taking the closest to maturity, price of the calls, price of the puts, the at the monies or nearest to the money, and then you add up the 2 of those and then divide by the price of the stock. That gives you the implied move. That's what the market makers are looking for. Now, again, you could do that for any, like it's important to kind of look at that when you have a big week. You could do that for SPY, and you could say, well, how much is the S&P implying for this week? So you could definitely, like, it's important to do when you've got an event-filled week to see how much is the market implying it's going to move this week. You'll find that those event-driven weeks, like we have this week, it's going to be a little bit more than usual. So that's the first step. So I'll go through that, and then I'll look at, also what it's done historically to see if it's trading rich or cheap. Like Apple was trading a little bit rich, for example. They were implying about a 5% move. It historically moves about 4.5% based on the last nine or 10 quarters. So they were looking for a little bit bigger of a move for Apple this time around. But yeah, I mean, if we go back to the Xilinx trade, it's good to talk about, like, this didn't work. I mean, notice it's pretty inconsistent. One that I will look at, I think, reports tomorrow. Like, what was another one that we were just looking at? Starbucks. Starbucks actually has a decent earnings history. I didn't catch that earlier, but just figured it would be a little bit too noisy with the China stuff going on. But there's a lot that you'll find that are pretty inconsistent. I try to stay away from the names that are inconsistent. Like eBay reported, they fell 9%. They did put together 4 good quarters. One that I've traded previously, the last few quarters, has been ServiceNow. That's a pretty good one. You could see their earnings consistency. Now, they did have one, again, so it's not 100% certain. But what you're basically doing by going through the exercise, I do think, like, names that have a good earnings history, you're skewing the numbers a little bit. You're improving your results a little bit when you're dealing with a company that has clearly management knows how to set the bar quarter to quarter when you have this. Like, another one that's always inconsistent is Twitter. Like, this one to me is like it's a coin toss, coin flip, because it has a couple quarters where it tanks and a couple quarters where it does really well, but there's no pattern here. Management doesn't do a good job at setting the bar, the expectations very well. Square's kind of the same thing. we've had that the last 5 or 6 ones. I bring up that one because it's Jack Dorsey. It's another Jack Dorsey company. But I remember, like, for example, remember when Twitter, like, a few quarters after they became public, like they were trying to do the earnings call Periscope and they couldn't get the technology to work. I mean, this is what this is like back in here. It was like these guys are fumbling. They just announced like Periscope. They're like, hey, let's do the earnings call on Periscope, and they couldn't get it to work. So that's an example I always try to remember for earnings. So I do think well, I'll try to only take the quality setups or Xilinx where I thought that there was some really decent positioning going on in it. I try to really limit the names. I just think, like, there was a question on Boeing today, and I hope the Boeing trade works, but I think it's so difficult to mess with an event that you just don't know what's going to happen. Versus, traders in the room have been doing very well profiting on headlines off of Boeing. So why not just wait until you get the next headline when the CEO makes a comment, and then the stock runs for like 3 or 4%? That seems like a better trade, even though it's completely trading on headlines, which I don't like to do either. But that just seems like a better trade than trying to like guess which way they're going to report, like, for earnings. I just think it's so again, you could do these. Sometimes it's fun to do an earnings trade, but yeah, I'll generally will risk about 5% of what I normally do on a normal swing trade. All right, so that's my my Debbie Downer on trading earnings. I just think it's very difficult. I also think what we noticed last quarter, trading earnings after like something like AMD. Now I don't know if AMD's down enough, but like if AMD was down and it was down into support, like where's top of value? So like if AMD fell to like $44, I would say that's a good level to trade off of because you have support down here. So I think trading these names after the number comes out, because we seem to always have a not always, but there are overreactions. All right. Any other questions for earnings related? And then I'll talk a little bit about this week's events, and we'll go over some charts because it is a chart forum webinar. And any questions that you guys have about this virus stuff that's going on too, we could talk a little bit about that too. So tomorrow we have 2 o'clock. We've got a regular, rate decision that comes out, as well as the press conference. What traditionally happens on these days is headlines come out at 2 o'clock. They decide. I don't think, what's the expectations for this? So there's no chance for tomorrow. See how it says 0? There's a 12% chance that they hike interest rates. So they're not going to act tomorrow. At least that's what it's pricing, and which I believe too. I don't think they're going to cut. They're not going to hike tomorrow, most likely. What they will be doing, so you're going to get a bunch of headlines that come out at 2 o'clock, and what they're going to say is, headlines about what they think, where the economy is, where inflation is, where jobs are. They'll talk about the balance sheet. These will all be headlines at 2 o'clock. Then what happens is the conference starts at 2:30. What you will generally see during the conference or with the headlines is some whipsaw moves. We don't always go the first direction. So if we begin to rally, sometimes we actually will end up down on the day. I don't really chase the first move that I see on Fed days. If you chase, sometimes the direction goes the other way. Vice versa. Sometimes there's negative reactions to the headline, and then they have the press conference, and by the end of the press conference, the market goes up. I think Powell's gotten better at the press conferences. Remember, like the first like he had a batting average of like 800 that he would tank the market. I think he's gotten the hang of it the last like what 3 or 4 Fed meetings when he's actually been better at the press conferences. Yeah, he's gotten better. Pretty hard to have gotten worse. Yeah, yeah, they were really rough. The you know, first 5 conferences that he gave. I mean, the market would be down, over 1% at the end of it. Yeah, ever since Jackson Hole. When was that? When was that, Scott? Do you remember? But there's no doubt, like there's been a noticeable change in his tone. Yeah, so that feels like around May last year. So anyway, in any event, I think the things that the market will be focused on is the balance sheet, whether they're still increasing, how much longer this is going to last. As far as like increasing the size of the balance sheet, the repo stuff, whether or not they can need to continue to do that, buying treasury bills, inserting liquidity into the market. I would think that they would be setting a timeline for when that's going to stop. I don't think that they want to be doing this for that much longer. Remember, this was supposed to be just like an end of year thing. First, when they started doing this, it was supposed to be, it's like month end, there's problems with the repo market. And it kept on stretching and stretching. And they wanted to make sure that they covered the end of the year. And they said, hey, we'll probably stop this, increasing the size of the balance sheet and repo rates. They said probably the second quarter, like I think, did they say the end of the first quarter? I think they said originally. So, and bottom line is they're going to probably put some type of a timeline, I would think, on whether they're going to stop doing this. But we'll see. That's that's completely what I think is going to happen. I just don't think they're going to spend the whole year easing. And it kind of seems like they're in the right spot now, like a 50%. Clearly they tightened too hard. So now they're kind of in the middle of this, which kind of makes sense to me. So anybody have any other thoughts about what else they're going to say tomorrow? So how does that translate to me? In terms of a Fed meeting, I generally I don't think it's worth like having like putting on a whole bunch of trades in the morning for that. I just don't think, in my experience of trading wise, I think having less risk going on to, I know I sound like a broken record with this stuff, but it's just not worth it. If the market's going to move that much, and I think that the risk is to the downside. Like, was he really? Is there a chance that they come out and they say that they're still worried about the economy and globally? They could still say that, but I'm more worried about them putting the timeline like, hey, that's it. We're not going to be expanding the balance sheet. So that's always how I kind of think about things. Like, kind of go through like a scenario analysis in your mind of like what's the possibilities that they're going to say something positive versus negative. I'm always worried about the risk, right? And I think as a trader, you learn over time, should always be worried about your risk. How much risk do you have on? Not how much you can make. Sometimes, and I hate to say this, but sometimes I get newer traders in the room they've just started trading, and like those are the hardest projects for me. Now, I'm always happy to help people when they come in, and I do spend time If traders really need it, I do offer to like speak to people on the telephone, um, to kind of help people who are just starting. But I'll tell you, when newer traders come into the room, one of the first questions I always get, and I know, and everybody's been through this, right? Because when you decide that you want to trade, you're like, how much can I make, in a given day? I want to make X amount of money every day. How do I do that? Well, that's uh, that's not how it works, right? If you have been trading for a while, um, well, my experience is that it comes in bunches. Sometimes just like I don't. Maybe yesterday is not a good example, but sometimes like under normal volatility situations where the VIX is like trading between a 12 to 16, you'll have days where you're like, I'm okay. I made a little bit of money or I lost a little bit of money. And then you'll have one day in the week where you'll make the majority of your money. That's usually how it works. It's not consistent, in terms of like making money every single day, especially option wise, right? So the first thing that I try to do when I have somebody who's completely new or has been just, hey, I want to get involved in trading. Tell me how to make X. How do I make $500 or $1,000 a day? Like, I want to be able to do that. Well, that doesn't, once you begin to trade more frequently, that's very hard to do to earn a set amount every day. So on days, and the other thing is so it kind of, that leads into the second point. When someone new comes in the room and when they want to know like how much they can make, you really have to get a handle on how much you could lose a day. Because the days when you have like where you crush it and you make a good amount of money, the challenge is not to give it all back. The challenge is to like not get overconfident and say, oh geez, look at this, I just made X amount of money, I'm going to do the same thing tomorrow. It comes in basically spurts, so you have to be careful that you don't give back that money when the market opportunities are not there. So tomorrow is one of those days where I'm definitely more concerned about risk, versus how much I can make on a Fed day. There's just too much uncertainty. Right. And I've had those days too, where I don't make any adjustments in my portfolio. And, where Powell was like in the beginning of what he was doing, and you're down like, $3,000 or $4,000, and you're like, on what? Because you weren't managing your risk appropriately into an event. All right. So that's why I'm always like, if you see the pattern of sometimes I'm more conservative on those events, there's no edge. Yeah, Apple's pulling in a little bit, coming back into that 5-minute VPOC. But there's very little edge in trying to make money on a Fed day. Like if you can catch the right direction, like once you start to see the momentum go, but I don't live for like trying to make money on Fed days. That's moronic in my opinion. I'd rather get those days over with. All right, so that's the one. So that's, now that I scare everybody, but that's just something that I've noticed time and time again. Anybody have any questions about that? And then we'll start to go over charts. But I did want to make sure, and that's why I talk about it in the videos. I would rather sit and then when you see the opportunities, then you can kind of pounce on some opportunities. Like I thought today was a good day to pounce. I thought today, I didn't like I never like when the market goes into the day and we're up 50, 60 basis points. Notice what we did here, by the way, for the day. We pulled right into the top of value. Sorry, I was reading the comments in the room. That's pretty funny. But notice what we did. We pulled right into, we had 3 or 4 red bars We held support, and then I just started to see more things kind of hold. I saw a lot of fades in the first 15 minutes of the day. And one thing that I noticed was that market breadth didn't waver. I was watching this morning. Zoom in here. It really never went negative on the day, which I thought was a good sign. So, you kind of take one and one, put them together a little bit here. The fact that we held support right at the top of value. So again, value area is doing a great job. And the fact that market breadth pretty much stayed consistent throughout the day, I thought was a good sign. And then just a number of things were triggering for me. One of the things sometimes I use these webinars that I have everybody in the room to make sure that you know some features. So number one, right, you could always use the search box for any symbol. So if you're wondering, like, if anybody's talked about, any stock, you could always put this in the search box. And you could see the option activity channel, where I put in some recent trades. The other thing that you could do, which I use all the time, is you could private message yourself. I always put notes in here for myself. So these were the ones, so I was going through charts, believe it or not, 11 o'clock last night, and I just put in symbols that I think are setting up. So this is what I put in last night. So so it's kind of like your own journal in here, which I use. So this way, when I come in the morning, and I've been doing some chart studies at night when the market's closed, these were the ones that I was looking at. Plan was the only one I almost pulled the trigger on. Zoetis I took today. Home Depot was a nice trade. Home Depot was one of those things where the whole home builders were strong again. And that one I just kind of found on the fly, which worked really well. TMO I did not trade. I thought TMO had some nice support. The reason why I didn't trade TMO today, which looks like it did fine today, was because it reports earnings this week. Abbott was another one that I was looking at today. Abbott actually finished in the red today. So I keep looking at Abbott and not pulling the trigger. What else was I looking at? You notice I've got a bunch of software names on the list because I don't think the software names, it's like almost similar to the trade war with what's going on with the virus. Like, I would rather trade a Coop versus a Starbucks right now, or a McDonald's. I just don't want that headline. There's more chance that there's a headline that's going to come out about McDonald's saying they're going to close, that they have to close more stores. I don't want that risk. What did Coupa do today? Coupa had a nice day. Coupa Software. This was a nice check back, by the way, to this previous breakout. Salesforce was another name I was watching today. Just wait for my charts to adjust. Yeah, I'll go over the indices, and then I'm happy to go over any charts that you guys have that you guys want to go over. But Salesforce held this 20-day moving average very nicely yesterday. I noticed that Salesforce wanted to rally yesterday. What was the other trade I was going to look at? There was another name that I was going to look at. Twilio, frustrating again, on the right side of the 200-day moving averages, cannot close on the highs. It seems like whenever I trade this thing, it doesn't work. I remember I was in a trade here. I missed this whole run. So I was like in this trade for a couple of days. I had call spreads on, I was patient, 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 and I thought this VPOC could be taken out. And I think right around here, I took the trade off, and it actually kept going. And I know Pat was uh, talking about this trade for a while, but I don't know. I seem to have difficulties when I get in; it doesn't move. Plan was another one. Plan acted pretty well. That's now out of this consolidation, so that's one to watch for tomorrow. TTD was another one that I would have traded yesterday, but I could not find an option that I liked. But this thing's close to breaking through. Notice how it did this before. I've got a similar trend line drawn. Yeah, so I'll start going over some of your requests. Oh, let me go over the indices really quick, and then I'll go. I knew there was something I forgot to do. So yeah, what do you got? I mean, this is a nice bar, by the way. We took out we completely engulfed the previous day. I honestly did not think that was going to happen today. So all in all, I think this was a very well needed move back. Now I don't know anything about the spreading of this virus. I'm sure that we're going to hear the way that this thing is being transmitted, and it seems like it's contagious. I mean, I would think we're going to hear more cases in the United States. I just think it's inevitable the way that this thing is going. Is it as severe? Like, I don't think you catch this thing and you die. Again, I don't know everything about this thing, but I would think they reported more cases in Germany. So I think this is going to stay in the headlines for a while. But I think that the more that you hear from the CDC and the WHO, the better. The more we get clarification, right? That becomes uncertainty versus certainty. Yeah, the flu's just. I mean, it is nasty. It's no. It is. I know I'm joking around a little bit, but it is not a laughing matter. It's this the flu can get really nasty on you. My brother had it too, and he was not in good shape for a couple of days. He's out in California. That's a good question. Marty wasn't feeling well. We should check in with him. I think this weekend, right? He said he wasn't feeling well, if I remember the right day. But yeah, I think the way that the market finished yesterday, it really did not give us any. It gave me no clarification to really buy the dip yesterday. What I was expecting for the day today was I didn't like that we were when I woke up this morning and saw us up 30 basis points. I wanted us to open up down 0.5%, and then buyers to kind of step in. So this is not what I was expecting at all for today. That doesn't matter. If you're making those predictions or you have an idea about what to expect, and the reason why I was expecting that today was because the VIX closed close to the highs yesterday. TLT closed on the highs yesterday. There wasn't really anything other than the bounce that we got midday yesterday to really hang your hat on yesterday. So that's why I would say, I think the best thing to do as a trader is to try to be as objective every day. So just because I didn't get what I was looking for today, with the market opening down 0.5%, doesn't mean I couldn't make money. I had an awesome day today. So that's the important thing to kind of remember with this stuff, is just to kind of be able to pick up on what the tape is giving you. If there's not a lot of momentum, don't force trades. When the market has momentum, try to exploit it. So again, tomorrow I think anything could happen. What did IWM do today? I think IWM was fine. This is, I think, going to continue to be a problem area. It really is not, just doesn't look as strong. It's in value. Anything could happen. Like, we're range bound in value. So I don't know why the small caps are just not participating. Qs moved a bit further down. So, we'll see. I think the 20-day moving average, considering that we're like kind of caught in no man's land here, I think the 20-day moving average is something to watch. Notice as well, I always like to turn to the 1 hour chart. Notice we did not get into value. So here, so this was nice for a little scalp, hindsight being 2020. Right, we took out this VPOC to the downside in the Qs. Look at where we rallied up to, right into resistance. So I don't think we're, out of the woods completely with volatility. I thought today was a gift. So we got the bounce today. So now what do we get? All right, I better stop talking because I see a lot of chart requests. So I will try to, right? So does anybody worried? What does the S&P look like? Anybody worried about that? S&P could still rally a little bit further. Notice we consolidated at this. This is S1. Oh, by the way, I wanted to explain this to you guys with the market webs. If you're new and you don't know what this stuff means, this is the value area. So this value area, I'm on the 1 hour chart. So this value area is based on last week's price action. Right? It's close to a standard deviation of time, price, and volume of last week, right? And that gives us some really good support and resistance levels. The other lines that we've got drawn are what's known as, this is R1, this is R2, right? So these are like basically extensions away from the value area, which also give us some good levels. So R being resistance 1, resistance 2. On the bottom, we've got S1 and S2, support 1 and support 2. I really like, by the way, how the support number 2 lined up with this virgin point of control, which worked out pretty well in terms of support. Okay, so let's so that's the value areas. Any questions about the value areas before I go on to all your chart requests? But the 1 hour really kind of gives me hints, in terms of like this Qs, like that troubles me a little bit, in terms of like if you're looking for more upside in the short term, the fact that we just basically ran right into the bottom of value. What's IWM look like on the 1 hour? IWM could push a little bit more. Where's Apple trading? Back up 324. Value areas off a little bit differently, actually pretty close. Bottom of value, NASDAQ futures versus the Qs. So R1 and R2 are the old 3rd and 5th Venoms. That's correct. Yep. And the reason why we decided to use those is because they had more significance to them. I think, as we're going along and as I've been using these lines, I'm just noticing a lot more that it is significant. Like Twilio hit this R1 today on the 1 hour. I was hoping that we could get, and we still we could get up to 129, but this is pretty far now. Remember, the closer these things are, I think the more like magnetic pull. So this is kind of caught. So like if you're in this Twilio trade with me, remember this one, I'm just in stock. My support, you know, if I wanted to make sure I'm locking in gains and like using a trailing stop, then right around 121.5 would be the level. But I like this air pocket. We just need to get above 125. But I mean, that looks pretty good. I mean, that stopped in terms of working well. All right. Any other questions? And then I'll start hitting all your charts. Thank you guys for posting the charts. Where do we get the new market webs? Well, I sent out an email about it. I will, I'll resend it to you, Bob. Which one is the VPOC again? So the VPOC are the red lines on my charts. Those are previous point of controls where price did not go through at all. So it almost becomes like a gap, significant like a gap needs to be filled. So, and you don't have to worry about the VPOCs unless you're trading on that side of them, right? So notice that there's one down here. This is not essentially active unless we were trading below 119. But just like with this S&P or NASDAQ, what did we look at, the Qs earlier? I mean, look at this thing. To a tick, it hit that. And I think if the more charts that you're looking at, you'll see that happen a lot. And I've noticed that the last couple of days. There's a lot of these. The last thing I'll say, and then I'll move on to your charts requests. If you want to know more about if the value area study that we use in the room all the time, if you're unfamiliar with that, you could go right into the webinars channel and you could go into this webinar. We go into much more detail when we rolled this out back on January 8th. And I put the recording in here from the 9th. So I'm going to move on. But if you want to know more about how we're using it and so forth and more examples, you could view that, that webinar that we gave. Okay, so let's go through some of your chart requests. So beyond, I think that one came out a couple times. So first of all, very short-term view. I know most of the time you're supposed to look at the long-term charts first and then look at the short-term charts. But I think really looking at 1 hour charts with the value area can help, because this is where you want to be setting alerts. Now, I don't know if you're looking at this in terms of long or short, but let's just say that you're neutral right now and you're looking for direction and beyond. I would be setting an alert at 128, right above value, and one at right around 150. So a little bit below and a little bit above the value area is what I normally do. So 129. Notice it got here once and failed. And then also maybe around 115 is what I would be looking at for beyond. But it's kind of setting up for, it's going to move one way or another. It's putting on, notice this VPOC was taken out. So it's putting in some type of a flag. So I would watch those two levels for beyond. And again, put alerts. And basically that's a lot of times, like when I say alert going off, I'm not just putting, it's not just because it's moving. And I think that's how I caught Home Depot today. I think I've got alerts on a lot of different names. What else do you have on that list? Costco. I didn't change the screen. Costco looks pretty, has been holding up pretty well. Let's do the same exercise. So first of all, it's putting in a bull flag. You've got support down here. And if we do get more volatility, I would watch to see like this 303 level would hold. And on the 1 hour, notice it's having a little bit of difficulty with the bottom of value. Now, price could get through this value area pretty easily because it's thin, right? When you have a very thin value area, price can get through it very easily. But I would watch for the upside, basically 311, and then 313 is the next, and then it's blue skies in front of it. So 313, 311, and then I would be cognizant of if it breaks maybe here, 305. Facebook. So Facebook, kind of like the Qs, is approaching bottom of value. This is going to be, it reports earnings after the close tomorrow. So, earnings are going to dictate which way it moves. You have a little bit of a dip in it. I mean, I think it's got a chance. I mean, I have some Facebook weekly calls on. I didn't sell all of mine today. I would like to give Facebook. So how's Facebook earnings look? It's not a huge mover. You have a couple red quarters in here, but you got more green. So I would err on that side that I think Facebook has a chance to. I'm more bullish than bearish Facebook. Put it that way. Home Depot, consolidating right at the top of value. So I made reference. So I had the trade on today for the whole value area, which it moved through there. And I did a nice scalping trade today in Home Depot. It's got to get above 235, right? It stalled at 235. I also have this drawn in here. But yeah, I would be looking for, I would set an alert at this point. We're trading at 233.86. So 235 would be a nice level to watch. And I think I had an alert on it. It triggered and I didn't put it back. So I'm going to do that right now because I like Home Depot. Yep, I do have an alert at 235 that already triggered. I need to reactivate it. So edit, activate. All right, so I'm cheating. I'm putting a couple alerts on while we're doing the webinar. Tesla is going to be a crapshoot on earnings. There's nothing really, I think, in the technicals that's going to tell you much. It's sitting right in the middle of value for the week. So it's going to be if Elon delivers or not. Netflix. Netflix had a little bit of issue with getting through value for the day. What did Netflix do? Up 1.6%. Basically, watch today's highs. That would get you a little bit above the value area for the week. And then the whole thing is if it gets above 351, then you set your stop to 350 or 349. What next one? Beyond, we did that one already. I would set alerts on Beyond. KTOS and MDB. KTOS, this is one that I traded back. Was it back here? And I got out of it quickly, I think I did. Hasn't had the same, it's been disappointing. Like if you look at LHX, this is showing relative strength. Where did LNT finish today? I mean, these are showing much better relative strength than KTOS. So that tells me, like, when I see something like this, it just means like this name I don't know what's wrong with it, but it should be doing what so let me state this another way. If we're looking at a sector, this is its whole sector, aerospace and defense, and it's moving up. This isn't the best looking, move up here. But then you look at a chart like this that's in the group and it's underperforming, I'd rather go with the winner. If you really want a level to trade, I would trade it against 1850. But once I see a name do this a couple times, it gets going and it stalls. I don't know. It's like move on to another one. Because I hate that. personally. Anybody else hate that? You're in a trade and it's like, oh, here it goes. Oh, no, it doesn't. Yeah, it's frustrating as hell, right? So I don't like. I try to like if a name keeps acting like this, um, I just go to another name. It's not worth my. It's too frustrating. MDB is starting to look interesting. This is another one I don't have good luck in. I've tried to trade MDB a few times. But it looks good. So let's look at this on the 1 hour. One 152 would be your support. Give yourself a little bit of tolerance. Maybe 151 and a half. But it's trying. I would like to see a nice green bar above here. But this is a nice easy setup. Oh, so my thoughts on how to take profits. I missed the question. So for this one, what I would be looking at, I start to do this, right? I start to make the charts more readable. On the 1 hour, I would say 159.26 would be a great level. But I'm concerned first to see if this thing can actually get above this range, right? You could even draw like a little trend line in here because it's having difficulty. What's the headline they're going to on CNBC? Oh, Facebook's top engineering guy leaves. So anyway, so that's 159. Let's see if there's anything on the daily. Next one up is 165. So that's how I would basically use the value areas for your stop price and your targets. I would use these extension lines, and that's how like mapping it out ahead of time, which is a great question. Great question, Claire. But yeah, that's what next charts I'm going to go to. I'll start with PLNT. But really, like that's the beauty of the value areas. It's like once you put your trade on, or once you structure your trade. I was talking about this with somebody yesterday, like planning out your stop price and like several targets is like a great. I cannot encourage enough. Is a great way to trade. So you have your plan of where you're going to be getting out of the trade if good things happen or if bad things happen. Because honestly, we don't know. Once we enter a trade, if something like today, like breaking above value, in a name, it could look good, but we see it all the time where something fails. Or if they would have said today, God forbid, that there was more cases that happen in the U.S., we probably would have sold off some. So you have to have that exit plan and defined on the entry of your trade. So this way you're not scrambling when you've got headlines. And so what I try to do is set an alert every time I get into a trade. You set an alert, like a stop alert, not a hard alert, where you're not entering an order, but you're entering your stop order and you're putting out a target for a trade. So I really try to do that, and I use that using the 1 hour bar and the mainly the daily. I'll look at the weekly too for major resistance. Like TLT, I thought was really interesting. Sorry, I'll get back to your charts in 1 second. But I thought TLT hit weekly top of resistance. So we'll see. It's not to say that it can't move above here, but that's pretty decent resistance that TLT hit this week. It's going to depend, I think, on what happens tomorrow. Obviously, that's a developing bar for TLT. So yeah, look at Planet Fitness. This is the same thing. It's also on that weekly chart. Look at the support, last year's bottom of value on the weekly. So I think for the longer term, and I know it's got earnings coming up, but it's got to get above 81. So that's an easy one using the weekly. I'm glad I brought that one up. 1 hour, it's just above value as well. So kind of similar to that MDB setup. You get 79 probably is where I would put your stop. All right, so you got some really good levels there to watch in Planet Fitness. But yeah, I would definitely be aware of that resistance on the weekly chart at 80. Massey, which has been a really good under the radar medical device company. So let's start weekly chart. It's trending. It's above all moving averages. Looks fine. It's above value. That's good. It's above value on the daily. It's coping with some resistance there. And it's approaching the bottom of value. So I would want to make sure that it gets above 170 for Massey. AAXN. AAXN. This is right in the middle of the value area. This one I'm starting backwards. I'm looking at the 1 hour chart first. Set your alert to 80.50. Set your alert to 77.50. But right smack in the middle of the value area for AAXN. Daily chart, putting in a bull flag, looks pretty good. And it's above value on the weekly. So this looks good. It just needs to crack through that value area for continuation. So again, good levels, 80, 50, and 77.5. KMX and VG. Let's do this the right way. Above value on weekly, that looks good. Inside value for the month, but we may start the month. You could start looking at the February value area, even though it's going to still change because we have a couple more days of January. But as long as this thing opens up above value for the new month, should be okay. And also I would watch on the 1 hour, make sure it stays above value. All right, so that's that request. Mr. Bob's request. CGC or MJ. So let's start with the ETF. And we'll look at the weekly. This is what I said a couple weeks ago when these pot stocks were going crazy. 2070 is your resistance. And it's kind of given back all of that gain that it saw from the short squeeze week a couple of weeks ago. So I would watch at this point. You know, you've got this. Notice, by the way, the small value area and what it did with that small value area. You're going to be contending with in a couple days. 1829 is right around there is going to be your new resistance. I would wait until this thing gets back above value, at the very least, which is going to be right around like close to $18, and then I would want to see this thing. But I think you're going to be contending with this weekly value resistance 2070. Let's look at CGC. CGC is a better looking picture in terms of the weekly chart. You've got support down at 2120. This also bounced nicely on the top of value. So this looks like a much better chart than MJ to me. Your support is down here right around $21, and you got a VPOC up here. Came very close to being taken out. So I would be using this one versus, is it a bottoming pattern? I mean, this looks like it's exhibiting chances of it, right? It's gotten over all the short-term moving averages. It bounced out. It rechecked and it bounced. So it's definitely, it's moving the right way. I would just make sure that if it doesn't, then I would get out at 21, because this thing does look a little bit suspect, the whole ETF. One hour, notice it's kind of like the Qs. It rallied right up to the bottom of value. So I would watch the same the next couple of days. This is a crucial pivot for it. Right around the $24. You're welcome. Oh, was there talk of a new? So if you have already updated your market webs or you've purchased them already, so I'll give you guys a quick story for this. I'll make it really brief. So what we did, because everybody was asking us for the new release, like, hey, please roll it out, please roll it out. And we made enough changes where we thought we were good enough. And we went ahead and rolled it out to everybody. What we've been doing with it since we rolled it out is still like perfecting some of the memory issues, trying to make it faster. So we might be sending out, an updated version with just a slight tweak to it. And I will keep you guys up on that this week. I'm testing something new with web. It's nothing, there's no new feature. We're just working on the speed. So just remind me if you don't mention that, if you don't hear me talk about it in a couple days. But he sent me a new version this morning. If you remember this morning, I was having difficulty with my charts because he sent me a new version and it blew up my Thinkorswim. And I didn't know if it was the new version or if it was Thinkorswim. So that's why I was late this morning. So we're always doing testing on this stuff. Next group, LSCC. So this one popped really nicely. Geez, what a difficult fade that was. Well, it's come back to the breakout point. That's the good thing with this. But man, whenever I see this, it's so disappointing. So let's talk about support first. I would make sure that this thing holds. And you could see the new value area that's developing for February. I would say 2050. I would be mindful of that because you just don't want to be in something that gives it all back. It's crazy that this thing went nuts one day and there's absolutely no follow through. But that's how stocks work. You also have a nice level of resistance on the weekly. If you're not in it, I would hold off and wait till it gets above 22. Yeah, and it's got to get through this value area too for the week. Qualcomm. It's a name that I was interested in. Never pulled the trigger on it. Qualcomm is trending. It's above value for the week. So watch your support of 82.50. This name's going to be reporting earnings, so there's not much I could really tell you in the charts. Right? It's gonna move one way or another. It is in value for the month right now, so I'm going to move on because Qualcomm, these names will move one way or another pretty decently off of earnings. Right? We just saw what happened to Xilinx. IGV, had some nice relative strength. It held the 20-day moving average. I would watch this Venom where it bounced. That line, I do like when the moving averages line up with the value areas. So I would watch 244. And we're just in value. So if you're not in it, I would look at 252 and 250. 250 support, 252 resistance on the 1 hour. EM, there's a beautiful VPOC this thing took out. I know this was talked about in the room, but that's another good example. I mean, that's pretty amazing. So let's start with the weekly for our emerging markets. I would like to see this thing get back above value. That's really interesting. So this thing's got to rally a little bit further. We want to see this thing get above 44. So this thing bombed all the way through value. Unbelievable. So yeah, 44 is a good starting point. This thing's got to get back above 44. And then we're going to have more resistance to contend with. But if you're long-term, You could also trade this versus the 200-day moving average, and I would get out if it breaks the 200. That's a nice way to use that as well. FM Frontier Markets, I sold that on Friday. Let's look at the weekly first. Still above value. Notice it hit some resistance at this R1. But your support is down here at 29.30. This actually looks a lot better than EEM does. Still way below value, but did not break down. So kind of tough. If I was in it, I would stick with it until it holds, unless it breaks support. But that's kind of a tough chart right now. VG, Vonage. Let's look at the weekly chart first. Vonage is hitting resistance on the weekly chart at $9. So that's, I think the main thing to watch is that resistance on the weekly chart. Notice it has, so trying to bottom, had a couple days of a rally, putting in a flag, and it's got to get it above 9, and then next spot is 1054. The ZTS, would love to look at that one because I got into that today. IDEX Labs, again, earnings right in front of it. Let's start with the weekly chart. You got some resistance up at 290. Interesting that that's pretty valid because 2 candles hit that resistance, could not break through for IDEX Labs. So that's what I would be watching, I think, for the upside. Also 290 is going to be probably the top of value for the new month. And support is going to be right around 270. But again, earnings is going to push this thing one way or another. So why did I like Zoetis today? What got me involved in this name? It's trending. It's above value for the week. It found support right at the top of value, which I like to see that. And then it also lined up on the 1 hour. It got into value for the week, right? And this is enough of, it's a $4 move. That would be a place to take target for the week at 142. All right, guys, any other names? Any other names? Or like this is a great time to ask any questions that you have about the room, what we're doing on a day-to-day basis. Scott, any of these things. Doesn't Apple just look like it's just held the trend of what it was doing without this blip? One other point, the last couple days, just things that I gravitate to when we have dips like this in the market that we've had the last couple days. By the way, how crazy is that? This bad print took out 3 of these VPOCs. Just to help you with strategy, the way that I think about the dips, right? So clearly, we still have a lot of uncertainty with this virus. The areas that it's probably going to be more sensitive are any China names, right? Because China is definitely, they're on like a whole bunch of cities are on lockdown, right? So that's the most sensitive area. So just to kind of give you the train of thought that I think about when we have one of these dips. So China internet names, could they rebound? Yes, they could. But you're going right into the heart of the situation. Same thing with all the travel and leisure stocks. Your Carnival, your Wynn, your casino names, your Starbucks, your McDonald's. Right, so everything has gone down the last couple days. Or so you could say, okay, I think that it's gone down too much. Some of these names that are in the heart of what's going on. Or you could go after a sales force that has nothing to do with what's going, or has, I'm sorry, I shouldn't say that, has less exposure um, to what's going on, and pick a name that's down in sympathy. My thought is always, when we have this stuff going on, is to pick another name that's down, that has less exposure. Now, of course, like, you could try a win and so forth, but you're really like going into the heart of the situation. If you pick like an Apple or like Facebook is just down in sympathy. Facebook doesn't, is probably like, or like, that's what got me interested, because I don't normally trade Snap. That's what got me interested in Snap, because it has less exposure. But meanwhile, it still went down. So I always gravitate to groups of stocks that go down, that have less exposure to the issue at hand. That's the same thing with the trade war. Names like Caterpillar and Deere, I stayed away from. I traded more of the software names. I traded more of the internet names, because you couldn't tariff those names. So it's just kind of like, so I'm not saying like it's bad going after a casino name or something, but I think it's a harder trade. I would rather pick the names that go down, that are just down because the market's down. Does that make sense? Do you guys agree?